Reserve Bank of India's tightening on easy personal loans is expected to make borrowing cost higher for consumers. The RBI's have been concerned, RBI's in fact has been concerned about the surge in unsecured consumer loans, personal loans and credit card loans for a while now, with the latest circular requiring banks as well as NBFCs, the non-banking finance companies, to increase risk weight on such loans and also limit their exposure to them. The RBI is pushing lenders to put a lid on the rapid growth in this segment. Now, RBI data shows that personal loans grew at 23% in August of 2023 and credit card outstanding was pegged at 30% compared to August of 2022. Retailers, manufacturers may also end up bearing the cost of RBI's diktat on tightening of easy personal loans. We want to understand the impact. With me is Kartik Malhotra here in the studio. Hi Kartik, good afternoon. We are also given to understand Amit Gupta is joining us on the show. But before I go to Amit, I want to first understand what exactly is RBI's concern here, apart from the fact that there is a growing segment of unsecured loans. What is concerning RBI?
So I think, Shweta, RBI has been very consistent for almost a year, more than a year now, that this ballooning of personal loans, and especially those which are unsecured, which don't have a mortgage, don't have a tangible asset that the RBI can redeem against a loan given out, the ballooning of such loans has been a concern to RBI, and RBI has been telling banks and has been telling finance corporations that take it easy with this easy lending, which can eventually turn into bad debt, because at the end of the day these are unsecured loans. But with the surge that we've seen in these unsecured loans and consumers people wanting to actually convert everything into EMI, some no cost or very low cost EMI, staggered their high value purchases across 6 months, 12 months, 18 months, buy now, pay later, all of that. So all of that has now led to RBI finally saying that, if you as financial institutions are not willing to tighten the reins, then maybe it is the job of the central government to come in and say that, provision for those bad debts, provision for the possibility that the loan that you are dishing out may actually not ever get recovered by you. As a result of which, a 25% increase in provisioning against the loans that are being given out. So overall, according to Soumyakanti Ghosh, the chief economist of SBI, the data is fairly large. It suggests that about 84,000 crore rupees worth of additional provisioning will have to be done at the capital end of the bank's books. This figure was to the tune of about 1,60,000 crore rupees. Now an added 84,000 crore rupees is pretty much banks now needing to keep aside about 50% more capital against these unsecured loans. Now the fear right now is, and that is what some white good manufacturers, producers and sellers of expensive items like air conditioners and refrigerators and other white goods, consumer appliances, are now worried that banks will obviously, because of this capital allocation, will need to increase the lending rate. And personal loans that used to come dirt cheap or pretty much in some cases no cost EMIs as well, and very easy, hardly any documentation, and hence they were unsecured, will not come that easily to consumers. Now, if the tightening is not going to help consumers borrow, then will they really continue buying these high value purchases? Absolutely. And if they don't have the money in their banks or don't want to use the money in their banks and are availing of these EMI options to buy the goods and buy the aspirational products, then there could be a sort of trickle down impact on the whole consumption story, which is about 55 to 57% of India's GDP. So these are some of the concerns right now, with RBI increasing the risk weights on unsecured loans.
Absolutely. Amit, from what we are hearing and understanding, RBI's diktat will ensure two things. Number one, it will make easy loans more expensive. Number two, those easy loans may not be so easy after all. What sort of impact are you anticipating?
I think, I really commend RBI in taking that step, because, as Kartik was also saying earlier, RBI has been actually warning this for almost now 12 to 18 months. And the credit card outstanding, for example, have witnessed a 25% growth in the last 12 months. It was only 15% of the overall credit some time back. Now, what is also happening is, one is that, this unsecured personal loan growth, that is coming on a lot of negative factors. Obviously, the RBI has all that data. So they are seeing that this loan growth is coming at the back of stagnant real incomes. There has been a decline in the personal savings. There is a very sharp rise in the energy or education and healthcare inflation over the last couple of years. And then they're also seeing, how much people are actually rolling over this credit into the form of EMIs and paying very large interest up to, let's say, 35, 40% also interest onto this.
Right.
Uh, and, being from the, financial markets, I also understand, and from my scuttlebutt and from my talks to various kind of investors, that a lot of these unsecured consumer loans, which people are getting from the BNPL kind of companies, these are also used to facilitate margin trading, options trading, weekly expiries, and all that kind of stuff is also happening in the stock markets. So,
Amit, sorry
if
to
you're
butt in.
taking a
I
loan,
just
let's
want to
say,
understand from you, what is it that the banks or the NBFCs are going to do immediately? Is it correct to assume that the personal lending rate is actually going to increase? Are we going to see an upside in the interest rate on personal loans to begin with? And if that is the case, how much do you expect with this additional 25% on risk weight? How much do you expect personal loans to go up by?
so the impact could be, anywhere between 100 to 150 basis points. So the margin funding, for example, in stock market, that could go up by about 1 to 1.5%. Similarly with the consumer loans, we could even see 30, 50 basis points hike in the loans. And remember, these increase in the weightages is for both for existing loans and the
Yeah.
new loans.
Okay.
So even if you have taken an EMI, your EMI for coming EMIs are also getting increased by a certain percentage.
So if we were to extrapolate
So
this,
obviously,
Amit,
yeah.
just let's just break it down for our viewers. So if you're taking an unsecured loan or a personal loan for that matter for about 1 lakh rupees, now that 1 lakh rupees will cost you 1 to 1.5% more in addition to what you're paying as the going current personal loan rate. So that 1.5% also on a 1 lakh rupee loan is going to be about 1500 rupees per annum. 1500 rupees per annum divided by 12 months, we are talking about 120 rupees or so additional EMI on that 1 lakh rupee loan. So is it really that big a concern right now that the white good companies are actually complaining and consumer appliances companies are complaining that it's going to make a dent in consumption?
No, actually, it clearly depends on what kind of debt servicing profile of the households, or of the consumers it is there. My sense, talking to a lot of these consumer goods companies and also reading the RBI comments, my sense is that there is a very serious risk that this debt is not going to be, not going to be actually serviced by a lot of these household investors or
Okay.
household consumers. And the even the rating agencies have sort of a risk that a lot of these banks may not have that risk absorbing capabilities, because of this RBI move. Obviously, it will impact the profitability also of these lenders. So I think the risk is there on both the sides, the lending side as well as the consumption side. Uh, we are not saying that it's going to go away overnight, but there is a risk of that with a slowdown in the economy, these kind of loans can default, and also people will just get into a loop of not being able to pay the EMIs if there are job losses, etc.
All right, so debt servicing profile perhaps of an individual seeking the loan would now be considered and scrutinized further. That's the word coming in from Amit. Amit, thank you very much for joining in on that story. But whether the lending rates will go up or not go up, I think the sole loser here becomes the consumer. Somebody who does not have the collateral, somebody who is not a part of the formal economy to perhaps even have a good CIBIL score.
So, Shweta, I think these unsecured loans, to my limited understanding, don't even require a CIBIL score. This is something, it's a purchase that you're making online, and you opt for one of those EMI services, or even at a retail, offline retail level, you opt to convert a purchase into EMI options. Now, these EMI options require very little documentation, honestly.
Absolutely.
So, I think those which, that section of society which is perhaps not in the formal sector is, to my understanding, again, perhaps not buying, those goods even by seeking such loans. So, I think it will actually again be the middle class.
That personal loan may not just be used to buy white goods. It may used to, it may be used for a function. It may be used to perhaps service another
so
debt
I think
that you have.
those loans become a different story altogether.
Absolutely.
So personal loans taken for day-to-day meeting of expenses that buy now, pay later, or just existential sustenance sort of expenses. If you're living on credit for that, obviously that's a big red flag, and that is a big sort of indicator to look at and see whether your policies are aligned in any case towards making sure that that sort of a debt trap is not formed. I mean, we've seen money lenders, and we've seen that era of villains in society being money lenders and lending out and at very high interest rates. We've seen the entire microfinance story boom and bust on the basis of very high interest rate lending.
Hopefully that doesn't come back.
Hopefully that doesn't come back, but it's definitely the middle class which will bear some brunt of it. These are the folks who are driving the consumption side of the economy. At 30% of the population right now, this middle class is likely to balloon to about 60% by 2047 or so, and that's going to be a 1 billion strong middle class. So that's a huge number. Now, but again, I think coming back to the math, a 1%, 1.5% more on, let's say, on an average of 1 lakh rupee loan will come to about 120 odd rupees per month. So is that really going to create that much of a dent in the already fairly robust and flourishing consumption story?
Tightening of norms will.
Tightening of norms
with respect to disbursal
is definitely good. Like Amit said, that banks at least will not go out and seek for bailouts because they did not provision for unsecured loans.